Hey Lion Army, today I'm going to show you my profitable 1 hour trading strategy with the moving averages. If we just have a look over here, this is my real account, and as you can see I have $1,675 in profit currently on this trade, and you can too if you follow these simple basic steps. So as you can see over here, we are on GBP USD 1 hour time frame. This is the trade I showed you in the beginning of the video, popping off towards the downside. And now to learn this strategy, we will need 3 indicators. Go inside the indicators tab and type in moving average. Once you do that, triple click on the moving average icon and change the 2 settings to 25, 50, and leave the last one as default because we will need the 9 moving average. So once you do that, you will see 3 of these lines. If we just delete that real quick, the 9 moving average, 25 and 50 are popping up nicely, trending towards the downside. Now, since we're talking about the trend, we need to identify the trend before we can place any of our trades. So when I first started this strategy and entered the trade over here with a bearish engulfing candle, which is also very important, let's just use the replay tool and see what I actually saw when I started trading this pair. This is what I saw. So let's just mark everything what we need. So we have this downtrend, right? We see this nice downtrend. We see the moving averages 25 and 50 are also trending towards the downside. We also see the 9 moving average, which is also trending towards the downside, and the candlesticks are below the moving averages, which shows strong bearish pressure and momentum towards the downside. So once we identify everything on the hourly time frame, we can move on to the 4-hourly time frame and see what's going on. As you can see, it's trending towards the downside, so the 1 hourly is actually pretty much the same as the 4-hourly time frame, a nice steep downtrend. We can also see the moving averages acting pretty much the same way. Candlesticks are below the moving averages, which is a good sign for a short trade. Now, what we also need to understand is an area of sensitivity. So where was the previous area of sensitivity? Support and resistance lines. So let's say, boom, if we draw this one, this was a nice area of support. Why was this a nice area of support? Because every time it touched these zones, it shot towards the upside, right? So we had this nice touch and it broke through. What happens when it breaks through? It's a nice push, exhaustion push scenario, very likely a continuational push towards the downside. Now, to find good resistance zone, it will probably be this area zone, or if we have a look on the 1 hourly time frame, it could be the previous area of resistance, which would be here, which also would make sense because if it pulled back, let's say, it would cross in between this trend line and this area of resistance, which would be a strong indication for a pullback towards the downside. We would also have protecting our trade, the 25 and 50 moving averages, which would likely move something like this. And if the candlesticks decide to push up, very likely this is a crash zone and it's going to continue to go down. So what do we have now on the 1 hourly time frame? What did we identify? This was the 4 hourly, right, area of support. The area of support was broken. After the area of support is broken, what happens? It becomes resistance. So now on the 1 hourly time frame, it's a new resistance zone rather than support. If it was a support, it would have bounced back up towards the upside over here, but it didn't. It continued to drop down and gave us a bearish engulfing candlestick. Let's just zoom in on the bearish engulfing candlestick. When you wait for a bearish engulfing candle to close and a new candlestick forms, this is a good indication to enter the trade. So let's say we saw this area zone. This is why we have this trade open. As you can see, a nice sell trade. We saw this trade, bearish engulfing candle, we went for it and it shot towards the downside. We can see over here shooting towards the downside very nicely, and then it formed another bearish engulfing candle after another, which is yet another indication to go short. What else was important on the 1 hourly time frame? As you can see, why is this area so important? We don't need to look at, these candlesticks. Why was this area so important? So it was a new lower low. As you can see, it tried to break through this area zone. Kind of the wick doesn't matter. And as you can see, candlestick closures were around this area zone. And this one over here, bearish engulfing candle, which confirms the trade to go short, and a new lower low. This was previous, this is new one. I know it's not very substantial, but on the 1 hourly time frame, it means a lot. And as you can see, it continued to shoot towards the downside, which is nice and which is what we want to see. Now, what's also important is when do you close the trade? As you can see, it continued to shoot down and make new bearish engulfing candle after bearish engulfing candle, which usually means, you know, a nice trade towards the downside. Bearish candle, bearish candle, bearish engulfing candle, engulfing candle yet again. You see the point, right? And it continues to drop down every time it has a bearish engulfing candle. As you can see, it makes a new lower low, new lower low, then try to make a new lower low, but this was a confirmation and it did. New attempt, boom, it continues to drop down. So it does this push exhaustion, push exhaustion, push exhaustion scenario until sellers are finally exhausted and gives out a nice pullback towards the upside. Usually the pullback you can see on the higher time frame, so let's say 4 hourly time frame. As you can see, the pullback didn't really happen on the 9 moving averages, and the 25 and 50 moving averages are quite far away on our stop loss level. That's why a pullback was basically unavoidable. So now personally, I didn't close off this trade, I let it run in, but for this video only. Usually what I do and what you should do is, as you can see, 9 moving average, if it's crossing the 9 moving average, you close it off. So let's say boom, we closed off the trade, we're in, we're in the money, we got, around 60 pips profit. This is where, the candlestick closed. You close it off, you're done. Or you can portion size it. So let's say now I have 2.5 lot size trade, maybe close 50%. So close 1.25 lot size trade and keep the remainder running and move your stop loss to entry. So let's say we close off half a portion over here. So let's say 50% is closed. Yeah. So we have 1.25 lot size remaining. We move our stop loss to entry. So it's risk free. So even if the trade decides now to shoot towards the upside and retest our entry level or these moving averages on the 1 hourly time frame, it wouldn't really matter because you already gained some profit, and the potential gain if it continues to drop down is also massive. So it depends what trader you are, but as you can see, shot towards the upside, continued to shoot up, and then it went down yet again. And as you can see, it's currently going down again, and you could have potentially profited a little bit more money if you decided to wait it out, which usually a lot of people don't do. They don't have patience in Forex. And what I teach you guys is moving average strategy, which you need patience for. Trend trading strategy definitely needs patience, but the risk to reward ratio, it's definitely worth your time, and I'm glad to show it to you guys. Make sure to join my group, and for now that's it. This was Zelda's Forex Trading Alliance. Have a wonderful day, stay safe, and goodbye.